Welcome to the Daily Insights That Matter. Now let's dive into the fascinating world of auto retail sales, which is an essential economic indicator. When we talk about auto retail sales, we're essentially looking into the number of vehicles being sold, and this can be a revealing reflection of the country's overall economic well-being. Now, according to the Federation of Automobile Dealers Association, or FADA as they are commonly known, in September, the automotive retail sector really stood out, showing robust double-digit year-over-year growth of 20%. Now, it's worth noting that apart from tractors, which experienced a 10% decline in sales, all other categories experienced growth in their sales. Two-wheeler sales saw an impressive 22% rise, while three-wheeler sales surged by 49%. Passenger vehicle sales grew by 19%, and commercial vehicle sales saw a 5% uptick. Now, on a month-on-month basis, the industry as a whole saw a 3.5% rise in the total auto retail sales. However, the tractor segment continued to face challenges with a substantial 26% contraction. Now, when we compare these figures to the pre-pandemic period, the overall retail landscape has shown a massive 14% growth, signaling a robust recovery. Now, in a noteworthy development, the two-wheeler category for the first time exhibited a growth of 2% in their sales, potentially marking the beginning of a turnaround in the rural markets. Now, the key takeaways from this are quite promising. The recent auto retail figures look encouraging, with positive growth across most categories. As we enter October, we have the inauspicious Shraddh period until the 14th of October, followed by the auspicious 9 days of Navratri starting from 15th October. With the 42-day festive season encompassing Navratri and Diwali, FADA is shifting its stance from being cautiously optimistic to optimistic, anticipating a vibrant festive season for auto retail in India. Now, it's quite impressive to see how India has been on a roll in terms of business growth. In the first half of this financial year, India added a staggering 1,20,966 companies and limited liability partnerships. Now, that's a substantial 11.4% growth compared to the same period last year, when it was 1,08,583. Now, this data compiled by the Ministry of Corporate Affairs highlights the positive sentiment and confidence in India's business environment and its long-term economic prospects, despite facing some external challenges. Now, what's even more encouraging is that this surge in new company incorporations aligns with other indicators showing robust growth. The uptick in GST collections, the strong PMI for both services and manufacturing, and the increased credit offtake all paint a picture of a thriving economy. Now, as we discussed yesterday, the Business Confidence Index of the Confederation of Indian Industry reached a 3-quarter high during the July to September quarter. Now, this boost in confidence can be attributed to a combination of factors, including resilient domestic demand, sustained government spending, and improved financial positions of the companies and of the banks as well. Moreover, it is forecasted that India will continue to outpace other major economies in the coming fiscal year, with a growth rate of 6.1% and 6.3% for this year and the next year respectively. Now, this rate is more than double the global average, reinforcing India's status as the world's fastest growing large economy. However, there are some external factors lurking around, like the global economy slowing down and rising oil prices. Now, these pose a real risk to India's economic outlook. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.